Let's dig in a little bit more with what's happening in Hong Kong. The protests in Hong Kong over controversial extradition legislation have turned violent. We are joined now by noted macro investor Kyle Bass. He's the CIO at Hayman Capital Management. He's called the territory the largest financial time bombs in history. And Kyle, we're watching this. Frankly, it did impact the Asian markets, but here in the U.S., it hasn't had that much of an impact at all. Do you think U.S. investors should be paying closer attention to what's happening in Hong Kong?
Yeah, I mean, I think it's important to understand Hong Kong is still yet a fraction of the size of China, but I think when you look at it, it's the most levered developed economy in the world. They have almost 900% of GDP in banking assets, 9 times their GDP in bank assets, and they've got private sector credit to GDP at 300%. When you think about the U.S. and Japan, call it 150. So you have one of the most levered economies in the world encountering both financial difficulties and now political difficulties that are going to make the financial difficulties basically be put into checkmate. So I think the world needs to pay attention, and I think, unfortunately, it takes 1.5 million people to march the streets of Hong Kong to get the world's attention.
Kyle, it's Julia LaRoche here. Let's dig in more on this. So if this extradition law happens, what are some of the broader implications? What does this mean for business in the territory or even trade?
I think, hi, Julia, and I think, this is more impactful than Brexit is. This is basically Hong Kong exit. I think when you look at if this law passes, the manner in which the U.S. engages with Hong Kong and Great Britain engages with Hong Kong are both, we treat them as their own sovereign nation as long as they're deemed to be sufficiently autonomous, i.e. maintain autonomy in their judiciary, maintain autonomy in their economy, and in their legislative process. And this is a clear infringement of their judiciary process, i.e. Making a mockery out of the Hong Kong rule of law. And I think that you've already seen Speaker Pelosi and Rubio and a number of others in a bipartisan, and you think about this, American legislators are actually agreeing on something from both sides of the aisle, and they agree that they're going to immediately question the continued autonomy of Hong Kong if this law passes. Well, what does that mean? That means that the U.S. is going to treat Hong Kong as China, i.e. no more most favored nation trading status. We will impose tariffs. And when you look at Hong Kong's trade as a percentage of its GDP, it's enormous. So if all of a sudden a free trade zone becomes impeded by the U.S. treating them as China, it literally changes the calculus not only of the financial structure of Hong Kong, but the wealthy people of Hong Kong will leave. They won't subject themselves to the arbitrary political nature of China's rule by law instead of the rule of law. You will see an exodus, a mass exodus of people out of Hong Kong if this legislation goes forward.
Hey, Kyle. Miles Udland here. I think investors right now, at least in the U.S., are really trying to make sense of how much the U.S.-China trade fight is weighing on their outlook for the future, on sentiment in the near term. How much does this current kind of dust up, I guess you could say, in Hong Kong, the breaking up of the social fabric, if you will, how much do you see that as related to the new tensions between the U.S. and China, and how do you see kind of these two stories coming together?
I think they're two separate stories, believe it or not, but I do think that China played this card in Hong Kong. I guess they didn't realize how important this card was, and they're playing at the perfect wrong time. And so I think they're two separate and distinct arguments. China infringing on Hong Kong's judiciary and pushing forward a rendition bill that allows extradition of what China deems to be fugitives is a little crazy on their part right now. And the trade negotiations are separate. And I think we all know that these aren't just trade negotiations, right? I think if you look at the U.S., not only the president, but if you look at the National Security Council and our various presidential cabinets, they've gone back and re-reviewed the 2001 WTO Ascension Protocol that China signed. And China made a list of promises as part of the WTO Ascension that they've adhered to none of. And so what we're demanding of them in this agreement is a restructuring of our complete arrangement between the U.S. and China. And most importantly, it has to be both measurable and enforceable. And this is where the clash of civilizations comes in. This is why this deal isn't going to happen. China, it's antithetical to the Communist Party to sign anything that's unilaterally enforceable against them. That's why there is no agreement. And so I don't anticipate an agreement coming at the end of June, I guess June 28th, under the G20 in Osaka. You're not going to see some magic agreement where China agrees to be both measured and enforced against. And so it's finally bubbled these differing civilizations and differing constructs of civilizations are now clashing at the very fundamental core of basically how they don't agree.
Kyle, it's Julia again. When you think of Hong Kong, you often think of it as like a financial center of the world. Do you see that status in jeopardy? Is that in jeopardy given what we're seeing today?
Without a doubt. I mean, if you're look, there are 85,000 Americans that live in a city of 7.5 million. And if you're an American investment banker or a British investment banker or choose a CEO, you're not going to subject yourself and your family to the arbitrary and probably politicized allegations of the Chinese government. You're going to move, and you're probably going to move to Singapore, or you'll move to somewhere else that actually has a rule of law. And that's the key here. And so I think you're going to see a mass exodus of wealthy and call it executives from Hong Kong if this passes.
Hey, Kyle, Andy Serwer here. Let me push back just a little bit because I heard the same kind of stuff in 2014 with the umbrella movement, which was similar issues, basically concerning control by the PRC over Hong Kong. And here we are again, and obviously the Chinese government is moving in a direction, and this is another step. So, I mean, isn't this just part of an evolution, and it's a continuum, right?
Andy, I just don't buy that. The agreements that govern the relationship between the U.S. and Great Britain is a 1984 Sino-British Joint Declaration, and in the U.S., it's the 1992 U.S. Hong Kong Policy Act. Both of those are re-underwritten. In the U.S., it's re-underwritten once a year. In Britain, there are 2 reports to Parliament each year. And in both of those reports, in the last 2 reports, the one from Britain and the U.S., Britain says specifically, it said that, quote, we also believe the Chinese government's approach to Hong Kong is moving closer to one country, one system than it is to maintaining its treaty commitments under the Joint Declaration. And in the U.S., the agreement specifically directs the President of the United States to report to Congress whenever he deems that Hong Kong is not legally competent to carry out its obligations under the international agreement. So here you have a scenario where you have Rubio and Pelosi saying they will preempt the president and deem Hong Kong to have lost its autonomy and cancel our trade agreement with them. They are not. This is not a threat. This is a surety. And as soon as that happens, as soon as this becomes law, I'll tell you that it only takes 4 or 5% of the people in Hong Kong to move to create the run on the bank, and then you have a financial system that collapses.
And a real estate crash like the world has never seen, that's for sure, too.
Hey, Kyle, before we let you go,
they have the most expensive real estate in the world.
Right.
No joke. Hey, before we let you go, I just want to ask you real quick about the U.S. equity market, what you're thinking here, I guess, through the end of the year.
I'm not really good at handicapping the U.S. market, but I'll tell you that if Asia slows down, which it clearly is slowing down, and if Hong Kong has a problem and China ends up slowing down some more, and all of the data, all the internal data in the Chinese markets tell you that things are continuing to slow down after a bounce in the beginning of the year, then I think the U.S. is going to have, I continue to believe the U.S. will have a shallow recession in 2020.
Kyle Bass, Hayman Capital Management founder and chief investment officer, thank you so much for joining us today. And also, thank you to Julia LaRoche.
Thanks, guys.
Thanks.